Hey guys, what's up everybody? Welcome to CG Market Watch and happy Christmas, Merry Christmas and happy Boxing Day. So I promise I will keep today's live video short, alright, as short as I can, because I know and I understand that everyone's celebrating Christmas and you may not be so involved in Christmas or you may not be so involved in the market as of now. You just want to celebrate Christmas, that's fine, alright? So we struggled through a whole entire bearish period, and we are finally at the end of 2018. We're heading into 2019. All right, and so today's topic, it's very simple. It's all about the Wall Street and all about what financial markets are doing that may have a potential impact on cryptocurrency market. All right, so I'm gonna be covering, giving you some of the tips or giving you some knowledge on what is happening around the world or what is exactly happening in financial markets that may have an impact on the cryptocurrency market. All right, so we'll also be talking about charts later on as well. Same thing, BTC, Ethereum, and we'll go straight into that in a bit. All right, so it's kind of surprising to see so many people online still. Thanks for tuning in, guys. All right, so let's go. Let me just switch my screen. Okay, so let's begin with CoinMarketCap. Right, so right now we are at 129 billion. Now, of course, we have lost a fair bit of market cap, to whatever reasons. Personally, I feel it's a lot of manipulation that's happening in the market right now, and therefore you see such a huge movement in the market, right? I think a lot of people didn't predict also that we will drop almost $500 from $4,200 all the way down to right now, which is hovering around $3,700 level. And it's a very, very strange thing, right? So Ryan and I, we've been looking at the charts for a while. We realize this is a very, very strange phenomenon. And if you look at a 4 hours candle, 4 hours candle kind of illustrated a point that we kind of dipped by $200 in a 4 hours candle. That's really significant, and it's strange, right? Because volume was there to push it down, of course, but we kind of just wonder if that is due to some manipulation that's happening that we can't see. All right, so I think the first thing we want to talk about is CoinMarketCap, my bad. So 24 hours volume, we're at 18 billion, whereas BTC dominance, we're at 51.5%. So a few days ago, we are seeing about 52, I think, and right now we're at 51.5%. So we do see certain tokens that are still doing pretty okay. I think Ethereum and Bitcoin Cash are still having green signs. And today there's a slight recovery as compared to yesterday when it was Christmas, and today is Boxing Day. So hopefully when we do get out of the seasons, the festive seasons, we do see some recovery. However, do take note that New Year's is coming. There's New Year's Eve celebration. It's going to be New Year's. There's going to be a lot of booze. There's going to be a lot of drinking here and there. So true volume will only kick in maybe in January, right? So don't expect too much coming in. But we do see some recovery here and there. Yesterday was really, really bad. We do see top 10 to 20 down by double-digit percentage. So that was kind of a huge loss. But today we see some green, we see some recovery. So I think that's a good sign. So this is it for CoinMarketCap. I'm not going to be going in detail, all right? So what I just want to talk about today, it's two particular news. They are important. First of all is that Wall Street is backing out of crypto. The second news is Dow Jones is in near bear market territory. Now, so just a little bit of disclaimer here. I'm not trying to illustrate or to push more FUD into the market. Neither am I giving you all negative remarks during this festive season. But I'm just telling you this news in a very pure matter-of-fact way that I think most of you should know. And I think it's important that we know about this. Okay, so what is happening right now with the institutions are that Wall Street is quietly moving out of the crypto market. Bloomberg reports, and we see that what is happening is one of the reasons why they are doing this is because of regulations that are not firm up. And also, to be honest, if you realize the certain stocks of different banks, most of the bank stocks are not doing that well right now at this moment. So, investing into crypto or creating a department just to handle cryptocurrencies or to, do research and development on it, it's quite a hefty amount, right? They have to spend quite a fair bit to even create trading desk, digital asset, custodian wallet, whatever you name it. So this is what is happening at the Wall Street level. So there are two reasons for the quiet withdrawal of Wall Street in the market. The downturn in the market, that's one. Okay, we're talking about the financial markets right here, and the lack of regulatory frameworks on cryptocurrency. So the first reason is relatively simple. 2018 has been a wild ride for crypto market with about 700 billion being wiped off. Now, 700 billion being wiped off is in 2018. So there's also a report that about $500 billion were wiped out in a single day from S&P 500. In a single day, right? So 700 billion was across almost a year, while S&P 500 only took a day to wipe out $570 billion. So think of it in that sense. There's a huge difference right here, but you can also see that how small the cryptocurrency market is as compared to just one index, right? So it's kind of interesting. Now, on regulation, it's believed that the continued lack of specific regulatory framework on cryptocurrency has continued to deter big names in the financial industry from taking the plunge into the sector. Now, does it mean that they are not in? It's tough to say because they have created trading desks, they've come up with certain innovation, they're still using a blockchain technology. But the question is, will they be doing it in 2019? Right? Will BUC be delayed once again? Are we focusing too much on the ETFs? Right? Like what SEC said. If let's say they are not approving the ETFs, they're not approving BUCs per se, then we may not see a lot of institutional funds coming in. Now, one thing that we need to kind of understand also is that a lot of different economies, different bankers, hedge funds manager, whatever, are also saying that recession is near. Now, the quick telltale sign of recession could be because number one, interest rates are rising. That's a very good way to curb inflation. So the Feds have actually raised their rates. Is to curb growth and also to curb inflation, okay, or CPI, consumer price index, from growing up too high, such that people like us, we cannot afford stuff, and that's why we complain, right? So that's one of the reasons, right? Interest rate high. Now, commodities are not doing that well as well, right? Oil is going down, gold is slightly going up. You can also see the CBOE VIX volatility index are going up as well significantly. In fact, I think it went up by close to 20%, I think, yesterday. So these are the telltale sign of what is happening right now in the market, right? So it's in a very, very bearish situation, and it's happening all around the world. Now, the only question is which countries or which asset class will survive this particular bearish season. Now, so Dow Jones near bear market territory because White House failed to ease investors. Is that true? So the whole idea here is this. Now we have okay, let's see where is it? Let me see. Okay, so on Monday, on Christmas Eve, in an attempt to relieve pressure on the markets, the US Secretary Treasurer Steve Mnuchin said that he has reached out to the CEOs of the country's 6 major banks to reaffirm that all of the institutions have lending capacity to support loans. Now, the one thing we need to kind of understand around the world, especially in the US, is that a lot of people are defaulting on their loans. There's about $1.3 trillion. Don't ask me how I remember all these facts, but I just remember there's about $1.3 trillion of education loans that are defaulted. There are many housing loans that are also defaulted even in the US. Now, if you understand how loan works, when you buy a certain stuff at the start of after the previous recession cycle ended, maybe that was in 2009 and 2010. The loan was incurred at that point in time. Now, when you sell your asset, when you move house or when you move something, you need to sell it at a higher price as compared to when you take up the loan. So the loan is transferred from first owner A to owner B to owner C. So the loan increases as we go on. And therefore, when people are unable to afford to pay their loan, they default on their loan, it becomes a country's debt. It becomes a debt of the bank. And the bank will transfer that loan per se to all the different people, the middle class people, or transfer the loan, you know, or in terms of other kind of products, they kind of raise their rates, they raise their management fees, things like that. So a lot of people are defaulting their loans, they are in debt. So this is what is happening all around the world, not just in the US, but in the US it's just more serious. So the government itself also has a huge amount of debt as well, right? So this is what is happening all around the world. There's a reason why the market cycle needs to reset. It's because of this reason, right? The loans are increasing, the defaulters are increasing, countries are unable to afford certain stuff, right? So what in conjunction to that, we have the US-China trade war that's ongoing still. And that is kind of slowing down, just impacting the whole entire market. Federal Reserve intend to maintain its interest rate high. Now, the one thing we need to understand why interest rate high, once again, is to curb inflation. But the problem when you raise interest rate is that SME or small medium enterprises who wants to borrow the money now has an issue because now interest rate is high. It's preventing us, SME, to borrow. So think of it in that sense. The banks have funds to loan out, but because of the Fed's increasing rates, the investors or even SMEs or even businesses are unwilling to borrow money. So when you're not borrowing money, how can the bank cover up their losses in terms of default loans? Because I have to take in I have a lot of money, I need to loan it out. But because the interest rate is so high, no one is borrowing from me. It's a chicken and egg issue. If no one is borrowing, I don't earn extra interest on whatever that's defaulting here. I don't earn anything. See, that is the main problem that's going on and on and on. So until the certain point where it just goes snapped, the whole thing just crumbles. The whole financial system crumbles again. Now, if you just take a look at the different stocks of the different banks, okay, maybe the 6 major banks, Citibank, Goldman Sachs, JP Morgan, you will have realized that the stock has actually retraced quite a fair bit. Since 2008 to 2009, during the recession, it dropped by about 70%. So right now, it has dropped by about 20 to 25%. So we still have another 50% to go if this recession is proven true. So there's a lot of things still in question, and the whole entire market is still quite bearish, the whole entire financial market. So this is what is happening. So we are kind of in an environment or in a situation right now that everyone is kind of holding on to cash. Now, in fact, when you look at it in terms of asset class of total returns in 2008, cash is kind of the only asset class sort of that went up by 1.8%. The rest of it are just in negatives or even in 0.3% for US Treasury. So you compare these gains with last year, what we have done. S&P 500 went by 22%, gold was up by 12.9%, and so on and so forth. So you realize that cash was only at 0.8%. So what we did this year in terms of cash at 1.8%, last year we did it at cash at 0.8%. But the rest of the other kind of asset classes are all in negatives. So you can just take a look at this from 2008 all the way till now. That is the difference. S&P dipped by about negative 37% back in 2008 due to recession, and then right now we're down by about 6.1%. So this is just a huge discrepancy between the different rates. You realize that S&P 500 was doing well as well, 2009, 2010, and so on and so forth. Now that was after recession, post-recession, and then the stocks of different companies started climbing up again. So we are coming to the end of a market cycle. The question now, the greatest question of all time now is, where is the recession? When is the recession gonna hit? Where is it gonna be triggered from? What will be the reason or the cause for it? And then what is the trigger point? All right. So once it's all triggered, which stock markets or which kind of stocks will be first affected? That definitely will be the financial stocks, which is all the different banks. And then we see the different sector property stocks. All right. All the different asset classes will get affected. Whatever that's more risky, okay, any form of asset classes that are more risky will be affected as well. So then we are looking for a safe haven, right? So where do we park our cash then? That's the greatest question that a lot of people are having right now. So you can see that what's happening right now in the market is that people are selling off stuff to hold cash, waiting for the recession to hit. They are either holding on in cash, in gold, probably, or in Bitcoin. Now the question is will Bitcoin stand the test of time? It hasn't gone through a recession before. Satoshi created it back in 2009, but it's decentralized, of course, but will it survive the test of time? Will it survive the recession? Now think of it this way as well. Now the halving is going to come in 2020, right? So if it comes in on 2020, will the recession end by then? Or will it start at that point in time? Will Bitcoin then be even more scarce in that sense? Will it be even more valuable? So there's so many questions I have on a daily basis that I've been questioning myself. And it's kind of impossible for us to even get an answer ourselves. But the one thing that we know is that almost all the trigger points are here. We have the trade war. We also have US Fed increasing interest rates. We have a lot of currencies not doing very well. A lot of companies are not doing well. They're laying off people. And it's happening not just in crypto, guys. It's happening across the board all around the world. All right. So in different states or whatever you name it. So this is happening, and this is going to happen, guys. So the question is, are you ready for it? Okay, so this is just a point that I just want to share with you guys today. Not to dampen your mood, guys, but it's good to kind of just know what is up in 2019. All right, so going to the charts now. What we do see here is, okay, let me see, where's my, okay, that's weird. Okay, so this is big BTC on Bitstamp on 4 hours chart. So what we do see here is that we do see a huge this is what I was talking about, the sell down candle, right? So this went from $4,043 all the way to $3,700. So what it meant is that in 4 hours we dipped by close to 300 US dollars. That's insane, all right? And we have no idea what caused this sell down. Now we also need to kind of understand that there wasn't any news triggering that. It wasn't as if like Buck saying that it's not going to launch anymore, all right? Or whether ETFs is going to be banned, crypto ETFs are going to be banned. Nothing of that sort. Or even Chinese saying that, oh, we're going to ban STO, we're going to ban all different kind of cryptocurrencies, whatever is not going to be available anymore, and therefore the market tank. But this was nothing. It's not even fundamentally driven, and this is not even sentiment driven. Well, it's kind of related to possibly a few things. Number one, maybe festive season, volume is weak. Number two, the whole entire financial markets are not doing that well. They're all dwindling. Sales, figures are not doing that well. Negative figures are here. Bearish territory is here. Everything is not doing that well. And this is reflecting on the prices of BTC. All right, so in terms of direction where it could go, we can only make certain hypotheses. It's very hard to tell you where it'll be heading to. Why is because you can see many doji candles. Most investors or traders are unaware, or they're not even sure where BTC will head to. So there's so much uncertainty right now. But talking about just BTC alone, we do see that it's happening. All the actions are happening in the cloud. So what we do see is that the clouds get thicker and thicker slightly later as well. So my personal feel, okay, this is just my own gut feel and based on technical analysis, is that we will see a short recovery very soon after Boxing Day, after the holiday, after the festive season. People are just enjoying their turkey, they're enjoying their booze, they're having fun. And then when they are at their gatherings, their family gatherings, they talk about cryptocurrency, they talk about the financial markets, they talk about what are good alternatives right now to be looking at. I just wish there will be intelligent conversations at the table, dinner table, hopefully. And therefore people start looking back into cryptocurrency. Now, the other thing about why I'm suspecting this way is also partly because Google search trends on BTC, on Bitcoin per se, it's almost on par with the Google searches on Donald Trump. So it's kind of unique in that sense, but what I just want to conclude from here is that BTC searches are increasing substantially, all right? So a lot of people are questioning, how do I buy BTC right now? So this is just on trending. It's a good thing that's happening around the world. But what we do see is that we are still, this is a channel that I hope we don't break down into. This is, you can describe it as a falling wedge. You can say that it's a channel, whatever you name it. But what we do see and we hope for personally is a recovery from here, a reversal going upwards. But we still have a lot of resistance to go for. We have our Senko span, which is at 3955. We have our EMA 200 around $4,000 mark. We also have EMA 50 at about our 4,050 mark as well. So these are the few resistance we have to breach in order for more upside to go. All right. So this is in terms of BTC prices. I'll be observing the BTC prices, and if I have anything, maybe I'll think about updating the group as well. All right. So yeah. So this is more for BTC. And when we take a look at, let me see daily. Okay, let's just take a look at daily as well. Okay, some restrictions. Hold on. Okay, so when we look at daily as well, we don't see much movement as of now. In terms of daily, we do see upside movement, and then we have a downward action again. And now it's more like a reversal candle as of now. So hopefully we do reverse out of this range, but we're still way below the cloud on daily. So it's still being suppressed by the Kumo cloud. So hopefully we don't exit the cloud. If we do exit the cloud, it will be a huge downside to come. All right. So the basically the support for the cloud. That we hope that it doesn't breach this point. It's at 3,650. Now if we do breach beyond this level downwards, then we will have a massive downward selling that's gonna happen. All right, so this is for BTC. Now when we look at Ethereum wise, personally this is one of the I've been looking at Ethereum's chart for a while, and frankly speaking, this is one of the best chart I have seen for Ethereum. Okay, that may signify a huge run up for Ethereum. Okay, potentially. Okay, once again, and This is because of a few technical reasons. Now, number one, we can talk about how it's above the Kumo cloud, okay, sitting very strongly on it. Whereas on the 4 hours for BTC, you realize that we are in the cloud. Okay, so it's a huge difference between Ethereum, where we are way above, and for BTC, where we are inside the cloud. So it's different. So anything that's above the cloud, tendency is that we are moving upwards. All right. You can also see how the EMA 250 has been interacting. We have a golden cross kind of situation happening here. So it's a good sign of recovery as well. We have Senko span, which is this green line here that's above all the charts as well. So it's kind of like a good sign that's ongoing. Of course, RSI, we can't speak much because we are correcting. BTC is correcting. Ethereum will correct as well. So this is just my own fundamental, a technical point of view that we may see some recovery from Ethereum's prices, just because it has been suppressed for so much because of the different projects selling out Ethereum. But we may see a huge recovery in Ethereum in the coming months ahead, or next year most likely. All right, so this is just a few technical reasons why, personally for me, Ethereum seems like a pretty good option as compared to BTC for now, in terms of upward action. But at the same time, all in all, it's still heavily dependent on BTC movement. All right, if not, we won't see a great movement from Ethereum. All right. So once again, guys, thank you all for tuning in. Now, if you would like certain new weekly newsletter that every week we're sending some great news about the market, do join our newsletter. It's on our website, cryptogrinders.com, and you can just key in your email here. We promise you we won't spam you anything. We'll just give you some of the best news on cryptocurrency. All right. So coming to the end, I just want to wish everyone, all of our viewers here, a Merry Christmas and Happy Boxing Day. All right. Oh, hold on, before that, let me just cover some questions here. Alright, so nothing much, right? It's just mainly discussion. Alright, guys, so thank you for tuning in. We will see you on Friday. So take care.